I want to welcome everyone to Global FX Radio YouTube. I'm your host, Andrew Spanton, November 25th, 2008. What a day! What a day! What an incredible day. I have to tell you, we got stopped down a lot of things last night. We were crushed in the morning, and boy, we made it all back, baby. And sometimes as a trader, you get lucky sometimes. And the best traders I've known have always been sort of lucky, where it's like, how'd you know that? And again, if you're a premium member, check out my YouTube comments. I mean, we got along everything after being stopped at 8 in the morning, and then all of a sudden the Fed comes out with this $800 billion plan, and to the moon, Alice. The dollar index, as you see right here, though, major break. Again, we predicted this. We had a big rally, and we got stopped out in cable. My stop in cable was 149.90. I mean, I suck. Stopped out, but we got back in. Commodity currencies very weak, as we saw. With oil down big today, gold up though, and again, this move by the Treasury, this is just anything but, this is so inflationary long term, and it kills me because no one's even talking about the ramifications of just printing your way out of economic Armageddon. What are the ramifications of it? Inflation and higher rates. And the 10-year note today got absolutely taken out to the woodshed and shot. Do I understand it? With the flood of treasuries coming in, the only thing, again, risk aversion, I guess, but I think the markets are anticipating a Japan-like scenario, 10 years of just low rates. I don't agree with that. No freaking way. I think we're going to have a period of low rates for a year or two, and Bill Gross has been so wrong out of PIMCO. I mean, that guy said that the rally in the bond market is over as we know it for a decade. Dead wrong. I think he's going to be right, but he's early. Big time. And I think the markets are anticipating a massive interest rate cut down to zero and negative real interest rates for a long period of time. And I think that this move by the Treasury, again, you can't print your way out of it without ramifications. And in my opinion, the ramifications are meltdown in the dollar, higher interest rates, and rampant inflation for food. Not necessarily oil, but basic stuff. It's going to cost a lot more money to manufacture as manufacturing collapses and they shutter plants because there's no demand. All of a sudden the government prints money, now there's demand, and then all of a sudden how do you just open up plants out of the blue? You have massive inflation then. More people want the same thing. So again, no one talks about the ramifications of this ridiculous printing of money. And the UK is doing it, the European Union is going to end up doing it, and the U.S. obviously is doing it, and Australia's going to do it. Everyone's going to do it, and it's a big mistake. Let the chips fall where they may. And again, this is a Japan-like scenario, but it's very different. Let me get to the charts. It's very different because everyone's slashing rates so quickly that if things turn, we're going to have rampant global inflation again. And it might not be this year. It's not going to be this year. Obviously, this year is almost over. It might not be in the first half of '09, but boy, 10, 11, rampant inflation, interest rates go back to 70 levels. That could be 16%. Can you imagine 16%? That's the only thing that's going to save the dollar. But again, look at the dollar index. We are busted. Not busted on long term. Obviously, there's a big uptrend, right? We got this huge uptrend, and we can pull back to the 38.2, 81.86. We're at 84.74, and we have broken through. And in my opinion, and I've spoken about this before at length on my broadcast, but again, end of the year moves, people. Take a look. End of the year moves. I don't want that. As we see, look at last year. Big rally in the dollar, right? End of the year. Notice when it started. Thanksgiving. Look at that. Bang, to the moon. So I think the same scenario is going to happen in the sense of we sold off into Thanksgiving, right? The bottom in the dollar, okay, last year was right around Thanksgiving. Look at that. 11.23, 24, 26, bang, the bottom. And then we had a year-end rally in the dollar. I think the opposite. The in-carry trade is going to sell off. But look for a potential massive reversal when we're eating turkey in the United States. I know it sounds silly, but people, I got to tell you, when we look, this is a 3-year chart. Look at the end of the year moves. I don't make this crap up. All right, look at this move. 11.22. It stopped on 12, right? And then we sold off. But again, the move was right around Thanksgiving, and they kept pushing it higher. Okay, and as far as the euro goes, I think we have potential to rally into that. If we rally significantly into Thanksgiving, massive reversal during Turkey Day. So those of you that are traders, I'd be have your laptop right at the dinner table, eating your stuffing and your gravy. But again, look at this euro dollar, broken out to the upside, broke this whole downtrend channel here, as we predicted. And again, last night, we had a beautiful pullback to get long. Right? We were still long the euro. We made beautiful trades in it. We didn't get stopped at it. We got stopped at cable. It's sick. But we got back long again. And I got to make this quick. I know I've been going to rant. So again, the euro dollar looks very good. Again, I don't see as big of a pullback as we had last night. We're going to look to buy any little pullback tonight in the euro dollar, maybe 130. Dollar yen. Again, this daily chart, we're buying it. I'm going long dollar yen against this 94.90 low, 94.93 low, 94.90 low. I think we hold. And I think the bond move today was significant, and that caused dollar yen to really sell off. Stock market was stable. Sterling dollar. Oh, baby. Relative strength winner. Come to Papa. We got stopped out. We got back in. Again, 20 exponential. I think it's going up to 30. Okay, we've broken this entire downtrend channel line here. And I think, again, we rally into Thanksgiving. Turkey Day. 1. Bang, bang. Maybe up to 160. Something like that. Does it make sense? Well, I mean, the dollar's been extremely overbought. It makes perfect sense to me for a snapback rally. And that's all we're having is a sell-off in the dollar from a very overbought condition. But I do think, again, the dollar rallies into the end of the year. Whether or not the dollar continues to sell off into maybe December 14th, maybe we continue to go. Look at the previous years. Euro sterling, massive outside day. We're getting short this baby. I think it rolls over. Double top, euro sterling, big reversal day. The market likes the pound story. I don't particularly like it, but the market likes it, so that's what we're going with. Dollar, euro sterling, nice double top. Euro yen never took out previous day lows. Oh, we got stopped out. We got back in, took our profits and ran. Again, broke the downtrend channel line. As long as today's lows are not breached, you got to get long the carry. Into Turkey Day. I love it. You got to get long. And again, I have 2 minutes. I just want to show you this. This is a daily chart just to show you folks the volatility that occurs at the end of the year. Very important for you folks to understand this. Okay, look at last year. And last year wasn't even that volatile. Okay, look at what happened at the end of the year. Damn it. Come on, I have time. Look at this. Not that huge move, but look at since Turkey Day. Turkey Day rally. I'm not saying that's going to happen. I'm saying reversals happen. Look at the end of the year in 2006. You think I'm nuts? This crushed me. Look at that move. Didn't stop. Look where it started. Turkey Day. 11/24. What day is today? 11/25. Okay? Bang. So I'm telling you, these big moves, whatever happens on Turkey Day, whatever move happens in Thanksgiving, will probably continue. So I think it's going to be a reversal should the carry trade explode into Thursday. Okay, so again, looking at this Euro-Yen daily chart, I think we go higher. And check it out for yourself. Okay, look at all the end of the year. I don't have enough time, but look at the end of the year, what happened. And if this 2-day move, if we continue to rally and we burst higher on Thursday, we might have a rally into the first week in December on the carry trade. I mean, we are so oversold here. And Thanksgiving is coming. Reversal, maybe this move continues. But again, whatever move happens on Thanksgiving, it probably lasts another week. I think it's probably going to be a reversal to the downside, but it depends how much the carry trade rallies between now and Thursday. So very important to keep tuned to me because I'll change my bias in a New York minute. I might be saying short, I might be saying long. Big decisions. Sterling yen again looks good, even though it's a hanging man. There's a beautiful hanging man on the daily, I understand. I still think we go higher. I think we test 150, and this carry trade goes up, and the dollar goes down. Continues. Andrew Spanton, Global FX Radio YouTube, info at globalfxradio.com, the only voice you'll ever need in Forex that makes you money. Have a good one.